Bitcoin is crashing to its lowest level since June, wiping out 1 year of gains. And everyone is now wondering, is the 4-year Bitcoin cycle officially broken, or is this the 4-year cycle playing out exactly as everyone thought it was? So is the reason why the 4-year cycle is changing, or rather, is it changing? Because now we do have a new investor, but is it because of the biggest banks and institutions entering the space? We all know that this was the year. So before we show you why I think this cycle is different, let's hear from the CEO of the $800 billion giant Standard Chartered, who has an interesting framework for what we should expect. We'll be right back in a second.
I guess my stronger conviction now is my medium-term view, which is that by the end of 2028, so by the time Trump leaves office, yep, we'll get to 500,000 Bitcoin, and that for me it's really just a flow story. It's the ETF inflows, and then if you compare Bitcoin and gold in a two asset portfolio mix at the start of this year. So this is where my 200K number came from. At the start of this year, if you look historically at returns and correlations and volatility, you should have been roughly 80% gold, 20% Bitcoin in portfolios globally. But the reality of the market cap's about 90-10. So I thought, well, actually, that should mean instead of 100K, you get to 200K. And that's just on historical volatility. And since then, vol of Bitcoin has collapsed this year. So yep, actually, like in a portfolio sense, global investors are even more underweight Bitcoin than they were at the start of the year when you vol adjust. So over time, I think portfolios do normalize to where they should go. It just takes some time. And the theory here is that before the ETFs started last year, investor access was limited globally, especially, and in the US quite dramatically. And over time, that improves. So therefore, over time, portfolios should go towards where that optimal mix says they should be. And by 2028, even if vol stays where it is now, you can make a case, particularly given what gold has done this year, that you can get to 500K. So that's my very strong conviction. End of this year has perhaps got a bit messy now because of all this China, US trade stuff.
Wow, 500K by 2028 sounds like that's a place where people should be.
So, I mean, are we coping here is the real question. Of course, I'm not alone. I got Nico sitting next to me, and also one of our favorite guests. We have Kent Halliburton from SAS Mining. So, guys, let's start here, because I think what is interesting is one of the things that Jeff Kendrick said of Standard Chartered is obviously the year started slow. Of course, actually, the whole year's been pretty slow, if we're being honest about it. But now that the ETFs, the institutions are here, they have been slowly allocating into Bitcoin. But I think what's most interesting about that initial clip, and I will break down what's going on with the price currently, or what I think is going on with the price right now. But he did mention there needs to be a way for these institutions to get into Bitcoin. And now that we have it, they're slowly getting into Bitcoin. And obviously this year, I think we could say it was a wash at this point. Like literally, guys, we are back to prices that we started the year off at. It's literally back to January 2025 prices right now. We haven't been here since June. So in the span of the whole year, we went, we went up and down, and now we're back to January prices. It's just been a complete wash when you kind of look at where we are. It's been a stable coin at this point. But I do think he has a point when he's talking about that there's going to be a lot of liquidity being printed. And I am going to bring up some receipts here. But before I move on, Nico, I do want to get your opinion, because you do have to run here for a second. Let's talk about what you were telling me this morning, and it's something we've been talking about on the show, this idea of what is actually happening right now. It seems like we're getting shaken out. It seems like they're trying to kind of destroy our conviction in this Bitcoin thing, and kind of explaining in simple terms, in 42 IQ terms, what you think Wall Street is doing right now.
Yeah, I think that's an excellent question. So I've been talking to a lot of smart people, right? A lot of smarter people than me or Opti. And, the general just question that I have had this year is like, look, like, what the hell's going on, right? This is the year after the halving. We're supposed to have a parabola. I don't understand. And I've been connecting the dots with the different people, the different conversations I've been having with people. And I remember what British Hodl was talking about. And remember, British Hodl comes from the TradFi world. He doesn't come from the Bitcoin world. And he like openly admits it. He has no shame in it. And then I've been talking to other people, again, people that worked in Fortune 500 companies. And again, they're looking at me. They're like, Nico, this entire year, you have to understand, they're trying to shake you out of your position. That's what it's about. They're trying to scare you. They're trying to shake you out. And then one of the most interesting things that was brought up to me, it's like, look, like, Nico, you don't think that, you know, when Trump is about to send out one of these Truth Social posts, he's not telling Howard Lutnick or Barron Trump, and they're not benefiting it from it financially? I mean, that's not a stretch to say. I mean, I remember the Trump coin launches, the day of the inauguration day, and that just caused the price to dump. So again, with this insider knowledge and institutions coming into Wall Street, coming into Bitcoin, they're doing what institutions do best. They're trying to shake you out of your positions. So as a hodler, as a retail, investor in Bitcoin, your number one goal this cycle should be to survive with as much Bitcoin as you can, meaning you should have more Bitcoin than the day before. If you don't have more Bitcoin than the day before, I think you're doing it wrong. And I think this year was supposed to exhaust you. This year was supposed to shake your conviction. This year was supposed to tire you out. This year was supposed to make you believe. I remember I had this conversation this morning that, hey, Bitcoin reached its cap. It's not going up anymore. It's over. It's done. And you see a lot of the whales, they're selling. Okay, you have to upgrade your lifestyle. I get it. I saw a post the other day of a whale who bought, I think it was like 10,000 Bitcoin for like $1.34, right? Something super low or something like that. It was like the very early days. And he sold it for $1 billion. And I remember this person was talking to me in the morning. He was like, Nico, they're selling it. Yeah, they made a fortune, but they're also giving up a lot of upside. Because I was telling him, I was like, look, the price is dumping. Like, this is really depressing. He's like, Nico, you understand? The last time Bitcoin fell under 100K, how long did it stay there? He's like, how long did it stay there? I was like, it was like a week or two. Like, literally, like, it dropped below 100K, stayed there for like a week or two, and then went back up. And then the last thing he told me, and I'll pass it back on to Opti, he was like, look, like, there's an institutional backdrop now, right? There are buyers of last resort. The fact that there was 400,000 Bitcoins sold in the month of October, and we're still above 100K, is extremely bullish. And what eventually that distribution exhausts itself, like those sellers exhaust, right? And with the amount of buying that's happening on the institutional level, what do you think happens to the price? And the last thing I'll say, and I think this is the most astute thing that this person told me, right? Which was like, Nico, the world still hasn't come to terms with the fact that Bitcoin is absolutely scarce. They haven't come to terms with that. They haven't come to that realization. The moment the world comes to that realization, you're going to see Bitcoin skyrocket, the likes of which has never happened before, right? And he said it with such confidence and conviction, and it came from a place of knowledge and experience, right? And I think that's the key point here, man, is that you're seeing gold making all-time highs. But what people have to remember about gold is that, listen, if the price of gold doubles, they're going to come out with the most sophisticated AI robot gold miners that are going to go and extract more gold out of the ground. If the price of Bitcoin doubles from here, the amount of Bitcoin mined, not only does it stay the same, but actually every 4 years it gets cut in half. And that's the part he was telling me. He's like, the moment the world realizes that Bitcoin is absolutely scarce, you're going to have an explosion to the upside. So anyways, I'm just trying to tell you guys this as we're falling. It seems like the sky's falling. The sentiment on Bitcoin X, I don't think has been this bad in a really long time. And I'm telling you, they're trying to shake you out of your bags. Like, this is what Wall Street does. This is what institutions do. Don't sell your Bitcoin to them, because that's who you're selling it to. You're selling it to Wall Street. Opti.
100%. And Nico, I'm gonna kick you off stream now, so you can go do what you need to do, and Kent and I will take it from here. So Nico, say goodbye to everyone.
Take it easy, everybody.
Let's go. Okay, so Kent, I am going to connect a bunch of these dots here, but I do want to get your opinion on where we are right now. Do you think the analysis that Jeff Kendrick said from Standard Charter makes sense? And add that with what Nico sent. Let's do a short little take on that. Is this where your vibes are right now? I know we talked about this earlier in the show, or actually before we went live. This is kind of the idea that everyone that's been around for a while is asking themselves. It's like, it does feel like, I don't want to say this is the final shakeout because we've been wrong all year, but this does feel, at least on a gut level, what is happening.
Well, I want to steel man the argument for a second, because as I'm sitting here listening to you guys, you know, what Nico said, spot on, you know, nothing to disagree with there. What I will say, though, is think about this. We are experiencing state level adoption. We are experiencing institutional adoption. What would we expect other than statecraft and Wall Street shenanigans in the price action, right? Isn't that just what's going to happen? So these fun and games, like, this is what we had to go through. Like, this is, like, we didn't expect it, of course, but like, how could we have expected any differently? I think we were just naive. So I think this lulling to sleep is exactly what's going on right now. And I don't know if this is the last dip before the shakeout, but I do know if you're selling here that you are selling to somebody else that is planning to hold for a very long time. These institutions have grokked Bitcoin and they are coming in and swooping it up. Like, if you look, there was a recent piece about how Bitcoin is performing like an IPO right now. I can't remember the author. You guys have probably already referenced.
It was Jordy Visser, yeah. I believe.
In the last couple of days, that really resonated with me, because you have early buyers that are coming in and they've held for a long time, and just in an IPO, they didn't have any liquidity. Now they're at a point where, cool, I can really transform my life. I get it, guys. Yes, you're giving up a lot of upside, but guess what? Time is finite, right? Like, you want to live your life. Like, we are not saving money to just save money. We are saving money to have life experiences, to help our bloodlines, right? So it makes sense to me that this is occurring. And it also makes sense to me that we're seeing this patient bid. Like, that's the thing that's not talked about enough, is the fact that there's this bid that's underneath the market that is just patient and just picking up Bitcoin at a good value. So I expect here that we see, okay, maybe we come down 98K or something like that. But I don't think that we will live under 100K for as long as we did earlier this year. I think that we're going to get pumped right back up. There'll be a spring action and off to the races we go. So do I think Saylor's right that we end the year over 150K? Sounds about right. Am I going to bet my life on it? Absolutely not. These institutional players in Wall Street are much smarter and more sophisticated at this boring people to sleep in and getting them to puke out their Bitcoin than I am. So what I know is that this is the absolute most scarce asset on the planet, and don't let it out of your paws unless you're selling it for a life experience or event. Otherwise, man, just hold. You're going to be fine.
Great advice. That's literally like the Bitcoin wisdom of the last 16, 17 years. There's really no reason to sell your Bitcoin unless you're trying to, like you said, Kent, update your life a little bit, maybe some life experiences. If you've been around for a long time, you have a young family, you got to enjoy your money a little bit. It's money after all. Anyways, I do want you guys, so I'm going to play one more clip here. This one is a little more bullish than the last one. This is coming from Arthur Hayes, but I want you to keep in mind the idea that Jeff Kendrick said around liquidity, and then listen to what Arthur Hayes is saying. And then I'm going to bring some receipts of some interesting stuff we saw happen basically overnight. So one more clip, and then I will break this all down.
Japan, the new prime minister, I can't pronounce her name correctly, so I'm not even going to try. She is talking about printing money to help households pay for goods and services because of the high inflation that was caused by the printed money of the previous administration, who she loves, Abenomics. So they're printing money in Japan, and then the ECB is going to have to print more money to save the euro. So again, all around the world, the politicians are going to print more money. And so I see it as a completely different scenario than, let's even talk about 2021 when Jerome Powell was talking about tightening credit, when every central bank was tightening credit because of inflation. We are in a scenario where the politicians around the world, regardless of where you live, are talking about spending more money without raising taxes. And so that's why I believe that this particular cycle will extend. I think it's going to extend into 2027, 28 time period. But again, who knows how long it will go for. But as long as the politicians are going to print money to hand out goodies to people to support them, we're going to keep going higher as a crypto ecosystem.
So very interesting. They said not only the same timeline, 2028, but basically the same phenomenon happening, that they're going to inject a bunch of liquidity into the system. Now, if you don't follow Bitcoin Twitter as closely as I do, then you might have missed a couple of things that literally happened overnight. Actually, the beginning of this week, it started on Sunday. So here, I'm going to start with here, but this is really where it starts to get interesting. So you're starting to see that the Fed is injecting liquidity into the repo markets, and James Lavish has a good breakdown right here. And we actually got more printing this morning, but it's not just happening in the US. It's also taking place in Europe as well. So we got James Lavish, and he goes, "Good morning. After a month of increasing usage, overnight borrowing, the need for dollars exploded on Friday to $50 billion, mostly in the afternoon session and not posted by the Fed, but captured on Bloomberg. This need caused the secured overnight funding rate, the borrowing rate, to explode to 35 bips above the Fed funds rate. While some increased activity is expected at month end, these are serious red flags that the financial system is on the verge of locking up unless the Fed adds liquidity soon. Have a great week." And that is the key takeaway at the end. Unless the Fed adds liquidity right now, it literally, like on a day-by-day basis, there is something concerning going on. And you guys know I'm probably a boy who cried wolf at this point, because I've been telling you guys this for the last couple of weeks, that there is a lot of concerns. Also, when you see the gold price start running, all of this is making you think, all right, they are panicking behind the scenes. And then to add, a little more fire or a little more gas on this flame, this morning, the Fed just pumped another $2.8 billion to a total of $100 billion since July. Now, I know $100 billion isn't as big as $100 trillion, or, the trillions of dollars we have in debt, but they're needing liquidity. And remember, a few weeks ago, we saw there is some kind of regional banking crisis going on because they don't have liquidity at the moment, which really kind of connects to on Main Street, very similar. People need dollars. Now, what is the Fed going to do? Well, they just announced, or Jay Powell just announced, they're going to end QT, quantitative tightening. Now, they haven't actually specifically said they're going to restart QE, but you can look at this as a more stealth QE. Instead of, helicopter money, they're just injecting dollars into the Fed's balance sheet, or rather into the SOFR markets and the reverse repo markets, so that banks have liquidity. So on a more, layman's term, QE has already started, and now we really know the reason why. But again, this isn't just happening in the Fed. And Tom Luongo, as spicy as his verbiage is on Twitter, really explained that this isn't just happening in the U.S. This isn't just about the Fed. This is a global problem that we're seeing. And he goes, it's always the Fed did this or the Fed did that. And he does go a little un-PG, so I'm not going to say everything he says here, but he goes, but did anyone notice the daily injections of 70 to 90 billion British pounds by the Bank of England last week? No, I wonder why. The 30 billion or the 100 billion in the US banking system is a rounding error. The 90 billion of British pound into the British banking system is a 5-alarm fire. And no one is covering this. Everyone's focused on Jay Powell and the Fed, but no one is seeing that this is a global problem right now. And this is one of the things they've been kind of telling us about Bitcoin, that Bitcoin is now a, what's the framing they use? Like a strategic asset, that there is contagion coming out of Bitcoin, and it's going to be Bitcoin's fault for the traditional financial system to blow up. And all of us from Bitcoin know it's completely ludicrous. It's like, no, we have nothing to do with this. Bitcoin is the escape from all of this. This is the escape valve. And now we're seeing that they are injecting billions of dollars into the system because they have no more liquidity, which is really kind of showing you the business cycle, the banking cycles, it is on a precarious edge right now. Hence why we're seeing all of the drama play out between Trump and Powell. And then, of course, we're seeing the drama from the U.S. versus the EU. Why do you think that Christine Lagarde is out there so concerned and so worried about what the U.S. is doing? Is because they're in trouble. That's why they're panicking to try to push the CBDC as quickly as possible, because then they could literally, add dollars into the system very quickly. They can shut you off from the system very quickly. So as you can see, the two clips I played for you were hinged on one single idea. There's going to be more liquidity that's going to get injected into the system. And then two, the institutions now, again, started by Larry Fink. Remember what he did? He basically said, hey, guys, it's okay for you guys to get into Bitcoin. Now he's trying to get all of his clients into Bitcoin. Yes, it's starting slowly. And yes, the price is getting very low, which I think is all connected because, look, if you have a lot of money, you don't want to buy a higher Bitcoin. You want to get a lower Bitcoin, and then you let it rip. So I think what we're seeing right now is all interconnected. Now, again, I might be kind of connecting the dots and connecting the tea leaves, and I'm looking like Charlie Day over here. But the thesis, I think, that Jeff Kendrick and Arthur Hayes are saying is pretty sound, that we're probably going to see the price of Bitcoin fundamentally change going into 2028 because of all these liquidity concerns and because they're going to basically turn the money printer into overdrive. And that's what I think is kind of what we're seeing right now. Of course, the price of Bitcoin's been literally flat all year long. Yes, we dipped from January to July, we dipped down. And then from July to now, we got a little pump. But on the whole year to date, obviously, if you go back a year, the price has gone up, significantly. But if you're looking at just a year-to-date chart, we're basically at zero right now. No action in the price of Bitcoin all year long. We're back to where we started, and everyone is wondering what is going on. Is the 4-year cycle over? This is supposed to be the parabolic year. And my thesis here, actually, before I go into my thesis, because I was making this case to Luke this morning, and he's like, what is your case here? Because I said the same thing I tell you guys all the time. I think the market structure in Bitcoin has fundamentally changed since the ETF was launched. And I'll make my case in a minute of where I think the price is going and what is kind of holding things up. I am going to do a little chart bowling here, guys, so forgive me now. But Kent, am I seeing things here? Or is this kind of playing out exactly as the thesis says? The liquidity cycle is going to enter into 2028, probably until Trump ends his presidency. It seems to be lining up perfectly.
Well, I think, there's been a lot of dunking on Bitcoiners, right? Oh, you believe that Bitcoin's price was tied to M2 and you see that they've obviously got a deviation, and you believe that, gold, it should be falling gold and there's this deviation, right? And I just think that we're seeing that deviation for two reasons. One, we haven't seen the big print yet. Nod to Larry there, author of an amazing book called The Big Print, but we haven't seen that big print yet, and it feels like we're on the razor edge of that happening. It feels like the financial sector is held together at this point with bubblegum and baling wire, basically. Like they're inserting liquidity into the system with all these angles, and they're trying to pretend it's not liquidity. It's literally the emperor's walking down the road naked right now, and the Bitcoiners are the ones pointing it out, being like, hey, dude, you're naked. And everybody else is like, no, he's clothed, he's totally fine. And it's not. This is just what was going to happen. And once that starts to break through into mainstream consciousness, I do think that we see Bitcoin's price really start to run. And I do think Bitcoin's price right now is being jawboned lower so that institutional players can take advantage of that price running. I don't think this is a conspiracy. This is just logical. If you know the emperor's naked that's walking down the road, and that emperor is the Fed and the U.S. debt-based financial system, and you're not getting the scarcest asset on the planet, like, I'm sorry, you're just not very intelligent, right? It's an institution, and the institutions are very intelligent, right? So that is, to me, just an absolutely obvious thing that's going on, not a conspiracy. This is just what they've always done, Wall Street and institutions. So kind of connecting everything together, yes, the business cycle is going to continue because this is just how money dies, right? Politicians are never going to do the hard thing here because they have to be voted into office. And the hard thing is, you say, hey, we're going to stop the spending. We're going to get back to budget neutral. We're going to pay down the debt. That's not happening. They've got to be voted into office, and voters are not going to allow that to happen. So what is going to happen is they're going to continue to print and try to inflate themselves out of this mission impossible situation that they're in, and Bitcoin's going to go along for the ride. So, buckle up.
Yeah, 100%. I think that is exactly what's playing out. And as that IPO kind of article showed us, I think we are all still working on old paradigms here. And I think we are fundamentally underestimating how big of a change the Bitcoin ETF actually had on our market and how big of a defining moment that was. And obviously we were all extremely bullish. Like, the institutions are here. They're going to buy our bags. They're going to pump it. They want, 10x gains in Bitcoin. And then you forget that Wall Street, they don't really change their playbook when they go into a new asset. They trade the same thing. They're using all the same mechanisms to essentially trade how they're used to. There's a huge market psychology to this. And this is, I think, what we're seeing play out. Obviously, greed is one of the defining indicators, or one of the incentives that we have to look at. And if you are looking, and I think I said this yesterday, or maybe I said it off the show, I'm like, if you are looking at Bitcoin and you don't think that these institutions saw Bitcoin go up, $1,000,000% over the last 16 years, and they're looking at Bitcoin and they're not like, I want these gains too, but I also want to get a semi-decent price action here. I think the billionaire playbook of fudding Bitcoin, buying your bag, and then letting it rip once you're ready, I think it's still playing out. And it's been a brutal year for all of us Bitcoiners that have been in the market for so long that we're all kind of like, I'm tired, boss. We're trying to rack our brains on what exactly is happening right now. And this is what I keep telling you guys, as I come on the show, obviously, I'm always trying to update my mental models here. And I think as we kind of have concluded in the last few weeks, everything we thought was going to happen is completely wrong. And, being someone that does value, telling you guys and coming on here and being like, look, this is my honest take right now, trying to be as authentic as possible. I'm like, look, I was completely wrong. And so this is also one of the reasons why I've been going and searching into the macro worlds and the geopolitical world to try to help me explain and help you guys understand what is going on. Like, first, help me understand what's going on so I can explain it to you guys, and then hopefully you understand what I'm seeing. Of course, this is all biased. I don't know. I'm just trying to make sense out of all the noise we're seeing. And I think at the very least, we can all admit that we had no idea what was going to happen now. And to be honest, we really don't know what's going to happen in the future. But with that being said, I think we are seeing something, and this is where I'm going to chart boy, guys, so forgive me. I know some people make fun of me because I do chart boy here on Simply every once in a while to try to explain what's going on. So I'll explain what is going on in my chart, and then we will chat about it. So here is, of course, the total Bitcoin market. I do have the, a simple moving average cross with the 50 and the 200. I'm on the week chart here for a specific reason. And this line here, I believe it was yellow. This is the month, or I don't know if I picked the exact week. I did it on the month, but this is marking when the ETF was launched. And so, as I was explaining this morning to Luke, when I keep telling you guys, I think the market structure has fundamentally changed since the institutions have got in. This is how I'll explain it very simply. Of course, we were used to the pump and the dump kind of cycle, the bull markets and the bear markets. They were very predictable, aligning to the 4-year cycle. You'd get a pump and then it would dump, and then you'd get around the halving, another pump, and then it would dump. And, we were all used to this. 2017 might have been the last great bull run, because in 2021, we all got this double top, and remember, back then we were wondering what is going on. This doesn't make sense with the 2 or 3 data points we had. It shouldn't be doing this, and yet it did. And now again, we have something fundamentally different playing out, in my opinion. So let me turn this off so you guys can see this a little better. I'll turn this, actually wrong one. So let me turn that one back on. So here is the ETF launch, and from the bottom of January 2023. There seems to be the straight line kind of new trend that we're seeing. And as you can see, The price, and I don't move this trend line. This is an old trend line. The price of Bitcoin is moving right back to that trend line. Now, again, I'm not saying that my magic lines on the chart is what's attracting the price, but what is interesting about this is that it does align perfectly with the 50-week moving average. And this is where I was telling Luke that the whole meme of a, stairway to heaven, basically a slow grind to a million as we frame it. Basically, we're going to get bored to death here in Bitcoin. No more parabolic runs, but most likely no more devastating 80% bear markets. And the reason I'm bringing up this 50-week moving average, actually, we just kind of broke down a little bit on that, but you saw here in 2025 of April, it did something similar. So every time the Bitcoin price has pumped recently, ever since the ETF launch, it essentially gets held up by this 50-week moving average. Again, I don't have very many data points because this is only going back to when the ETF was launched, but we saw this happen in September of 2024. We saw this happen in April of 2025. Now we're seeing this happen right now. Yes, the daily candle hasn't closed yet, so this could potentially be a wick that looks similar to what we saw 2 previous times before, but it does seem like every time we get back to the 50-week moving average, ever since the ETF was launched, that is marking the bottom for the next leg up. And I was explaining it like this. Let me see. I'll do some, simple. You see this kind of action playing out where it kind of steps up, it consolidates, it gets super boring, it goes sideways, and then eventually we should be seeing something like this. So this is kind of what I'm think is actually playing out right now, considering that when you look at here, actually, let me zoom in a little bit. You look at, or rather, you have the idea that the institutions here are trading based on their own mental models, what they're used to doing. And again, guys, when they see a market that has extreme volatility, either to the up or the downside, that makes them feel a little uncomfortable. Obviously, if it's dumping, they don't want to buy it. But if it gets too high, what are they thinking? This is a bubble. They're not like Bitcoiners where we love the bubble. We're like, yes, the parabolic run is back. So they see the price go too high. And this is where we've been complaining on the show. It's like, we broke an all-time high by like $1,000 or $2,000, and then it dumps again and consolidates, and then we do it again. 2K pump past all-time high, and then it dumps and consolidates. And this, I think, this might be that stairway to heaven. A lot of people have been saying this. It's going to pump. It's going to consolidate. It's going to pump. It's going to consolidate. It's going to pump. Consolidate over and over and over again. And so, if this 50-week moving average is holding up, and this is kind of the new movement, until everyone catches on to this new movement, I think this might be what's happening. So I'm kind of on the view right now. If you guys want to get my take, again, not financial advice, et cetera, but what I think is going to happen, I think this is the time to be buying when you connect this idea with the institutions are trying to shake you out. We're back to the 50-week moving average. We've seen this play out before. This whole time that we've been watching Bitcoin, every time it does this, 20, 30% correction to the 50-week moving average, everyone on the timeline is it's over. And I'm feeling the same thing right now. Everyone's saying it's over. I don't think it's over. I think this new kind of thesis of liquidity cycle, I think it is going to just keep pumping into 2026, 2027, 2028. I think that's what's happening, guys. I think the market structure in Bitcoin has fundamentally changed for better or worse. For better, no huge drawdowns. For worse, no huge parabolic runs. But it is a slow, methodical grind up. As Bitcoin matures, as that IPO article kind of explained to us, it is maturing. This is that fundamental year where Bitcoin changed from a speculative asset to a mature asset or something that needs to be in your portfolio. And so all this stuff is kind of what I'm thinking right now. It seems to be aligning. I think all the dots are connecting to, again, I could be reading into it. I could be coping. I could be feeding myself hopium on the show. But this is kind of what I'm seeing, guys. So you guys can tear me a new one in the chat. But Kent, what do you think on this? Do you think this holds any water?
Oh, I love charts with lines and squiggly things on them, so they make me happy too. No, I think the more fundamental thing, though, is, at the end of the day, at the moments, so my experience is, I got my first Bitcoin started watching it middle of 2015, got my first Bitcoin the end of 2015. And after watching this asset for a decade, I've come to realize the points in time where I start to like get a sinking feeling in my stomach is the exact moments when I should be buying. And I've been starting to get that lately. So for whatever it's worth, you know, that feeling that it's all over. If you're around Bitcoin long enough, you'll find the crowd is always wrong. They just are. And usually when the crowd is wrong is you want to zig while they're zagging. So it feels like it's one of those moments to me as well. I look at your chart and I see several things going on there at once. You know, that magic line you drew. Yeah, we're touching that again. And the other moving average, we're touching that again. I think one of my favorite things when I look at a chart is to take everything away and just look at the 200-week moving average, which last time I looked at it was going up like several hundred.
I can pull that up. I got it here. It's actually my blue line. It's actually here. Let me just take everything off.
Let me see your blue line.
And this is the blue line here. So I have the MA cross 50-week and the 200-week moving average. So the current 200-week moving average is at 55,000.
Yeah, just zoom out for a sec because this is my favorite thing to look at.
This one's a good one.
50 weeks, or excuse me, 200-week moving average is roughly 4 years.
Oh, yeah.
Right? So 52 weeks in a year. So you're basically looking at the 4-year cycle when you look at that. And what you see with it is it's never once gone down. It always goes up. So as long as you, in my pea brain, as long as I can think in a 4-year cycle, I know that there's not one time in Bitcoin's history where that has been proven to be a bad bet. So just think longer than the average Joe, and you're going to be fine with your Bitcoin position. Now, by all means, if you need the value of your Bitcoin to be unlocked in less than 4 years, like you might not want to invest in Bitcoin, but as long as you can think in 4 years, which is the time it takes most people to acquire a degree, like you're cool. Just chill.
Yeah, no, I'm just laughing because someone in the chat's like, "Yo, Opti, pull up the 1 minute chart," and the 1 minute chart is brutal. The 1 minute chart is brutal, right?
Don't look at that. Don't look at that.
Don't trade the 1 minute chart. The 1 minute chart is just fun to look at. All right, guys, don't trade the 1 minute chart. But yeah, no, I agree. I think recently I have been kind of I'm not going to say counter trading because I don't actually trade, but like trying to counter narrative my emotions, if that makes sense. You know, like counter trade your emotions. That's one of the big kind of wisdoms from Wall Street. It's like always like do the opposite of what your emotions are telling you to do, and you're usually good. And so on the show, I've been trying to do a counter narrative to what I'm feeling. And you guys see me crash out on the show. You guys see me literally my emotional state on the show. They know when I'm feeling it or not because you're just like I'm beat down, guys. Like I'm worn out. But in the last week or so, I have been feeling because, I'll talk to Nico or Luke, and Luke's like the most bullish person. Nico's a perma bear, so you can kind of balance against him. I'm a perma bull as well. And when we start feeling extremely bearish is when I'm like, oh, then we're probably going to bottom out. Like this has got to be the bottom when all the bulls I know are feeling bearish right now and asking themselves, like, should I sell out? Like, let's sell it all right now. Go put it on black on roulette. Like, let's buy a sailboat and just call it quits. And to me, I'm like, that's when I know things are going to get super bullish. So I couldn't agree more on that. All right, guys, I do got to move on. We actually went a long time on some chart bowling today. So we also, to follow up what we just saw, Saylor's doubling down on 150K end of year. So, Kemp brought that up. We'll chat about that a little bit. And then we got some interesting news coming out of the Samourai wallet case, which actually opened a whole nother can of worms on Twitter. Everyone's freaking out about stuff on Twitter. But this is some interesting stuff happening. And then with Kent, of course, from SAS Mining, you were saying some interesting stuff, and we'll chat about this later, of the value proposition of mining hasn't changed. Yes, the price of Bitcoin's changed. Well, maybe the price of Bitcoin hasn't also not changed as well this year, but the value proposition of mining hasn't changed at all. So that's what the show will be. And of course, got to remind you guys, smash the like button, comment on the show, let us know what you think. And of course, hit the sub button. We are dropping the best, the most content on YouTube. And before I move on, let's talk about our partner, Bitcoin Well. Guys, if you are in the market, right, if you're looking at this dip currently and you're like, I need to buy some Bitcoin, make sure you go to bitcoinwell.com/simply or scan the QR code over there. And when you sign up, you'll get a chance to win 1 million sats. But also the reason we love them is because when your dollars go through, they send Bitcoin directly to you. They've never lost Bitcoin. They will never lose Bitcoin because they never hold Bitcoin. Now, again, not financial advice here. But if you are sitting on the sideline right now and you have a lot of fiat that you want to capitulate on right now, make sure you get in touch with the OTC desk, the Infinite Well product, and you can buy $50,000 or more, and they will hold your hand, give you white glove service so that you can secure this Bitcoin for the long term. So again, go to bitcoinwell.com/simply and get yourself some Bitcoin, guys. This is the time to be stacking the dip. All right, guys, commercial break, and we'll be right back.
I want to give a shout out to our partner, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? Stampseed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on Stampseed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All righty then, guys. Well, look at this. We are testing 100K as we speak. So the current Bitcoin price is 100,540, which is a negative 20.3% decline from all-time high. We are barely hanging on to a $2 trillion market cap right now. And the current block height is 922,222, 922,222. Hey, at least we got the twos on there, guys. So maybe that's our saving grace here. But yeah, look, man. We are barely hanging on to that 100K as we speak. I did see a lot of calls of people saying like 87K, 91K-ish kind of pullback, and then that it's much needed in the market. Well, it looks like we are going to see this happen. So I wouldn't panic sell. I think this is the correction that everyone thought was coming. And of course, 30% corrections are pretty standard in a bull run. Now, the real question is this still a bull run, or is this a bear market, or is this a fundamentally new cycle market structure? Anyways, Saylor was on the news the other day, actually yesterday, and he's doubling down. So Saylor's still bullish. And as much as Saylor has gotten a lot of heat, it's almost as if all of his predictions have gone pretty well. So let's hear what he's doubling down on. Let's hear what he thinks is going to happen. And of course, what he is expecting for the end of the year.
You can imagine that the banks were afraid to get involved with crypto under the previous administration. You know, getting a supportive White House, a supportive cabinet, a supportive head of the Treasury, and then a law that says that it is legal for you to do this, I think was pretty important. Then that has resulted in an avalanche of institutional adoption. And now you have companies like JP Morgan, right, and Bank of America, and Wells Fargo, and BNY Mellon, and PNC Bank, and Citi, that are all announcing their support for this asset class. And if the trillion-dollar banks are willing to custody, and they're willing to extend credit, and they're willing to handle the asset class, and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States and everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds.
Okay, so that's what got us here. Let's just talk about the short term, 2025 year end. Where does it end up? Because I've heard everything from 100 to 200,000.
Yeah, well, the consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year.
Right.
Now on today's price action, 150K is probably sounding really good to everyone out there, considering we are testing 100K. But I think the more interesting take, and I know this might be like sacrilegious to the cypherpunk kind of ideology, but what Saylor said, I think is very interesting, that Bitcoin got to 100K without any help from the banks. And if we want to move up to the next 10X, price movement, that's going to be led by the banks. Now, I know me personally, that kind of gives me like an ick. I get this like gut feeling of like, man, are we really selling out? Are we really doing what we think we're going to do? But I think there is some merit to this idea that the next real big move, and we're seeing this happen in real time, the institutions want to get into Bitcoin. They're all positioning themselves to get into Bitcoin. Now, I wouldn't be buying my Bitcoin from them, but it does seem like the next move will be front ran from the U.S. banks, and that is going to spread into every other jurisdiction. And we're seeing this play out in real time. So I know this is not one of those predictions that we can kind of really disprove in the moment. This is going to be one where we look back in hindsight, like we've done to every other Saylor prediction, and be like, okay, he was right. As much as I was fighting it, he was right. This will be what we'll look back on this clip in 4 years and be like, okay, was he right or was he wrong? But again, still extremely bullish on Bitcoin this year. And I know everyone's panicking, but I think it's an interesting framework that the banks, which is, the Bitcoin's a separation of money and state. I know a lot of people are thinking to themselves, I thought Bitcoin was here to destroy the banks. And now we have Saylor out here saying it's the banks that are going to take us to the next 10X. And you could argue he's biased, of course. He's got a Bitcoin treasury company. So you could argue he is essentially Wall Street at this point, or might dwarf a lot of the companies on Wall Street. So you could see where it's coming from. Or further, you could say maybe he knows something that we don't know. We know he's in private conversations with very powerful people now because of his Bitcoin plays. So this will be something that we'll be watching along. This might play out exactly as he said, but we really can't disprove this. But just speculating, maybe just some a vibe check, a gut level view of this, Kent. Do you think he's correct? And does this make you feel kind of, disillusioned about what Bitcoin is and will potentially do?
No, I think I'm kind of, maybe I'm deluded myself, but I kind of see this as just an inevitable part of Bitcoin's adoption. I mean, yeah. I took out a Bitcoin-backed loan in like 2018-19 with Unchained Capital because I thought it was just super cool. And I was like, cool, I could use some cash. I don't want to sell some Bitcoin and have to pay taxes. So I did that. And from then on, I've always been like, why aren't the banks using this as collateral? It's perfect collateral. If they have the Bitcoin, then if I don't pay, they sell the Bitcoin. Like, there's actually no need for credit scores. It just seemed obvious to me. And here we are a decade later, and it's finally happening. And having better collateral, I think, fundamentally changes banking. And this is just part of Bitcoin being a Trojan horse. It's just going to transform the system from the inside out. And so while we like to be the rabble-rousers, with our pitchforks and torches, storming the castle, like, I don't think it was ever going to play out that way. I don't know exactly how it's going to play out, but it makes more sense to me that coin gets introduced to the banks, and then they transform banks from the inside, than for us to, you know, storm the castle and see the banks change from the outside. So I'm cool with it. It sucks. It's boring. You know, I like McAfee a lot more. He was a lot more fun, but he's not here anymore. So, you know, we got what we got, a bunch of bankers and Bitcoin treasury folks, and we'll have to do our best to get by. But I think life gets a lot more fun once we get on the other side of that again.
Yeah, it was, we really didn't know what we had in 2017, 2020 ish. I don't know when McAfee supposedly, you know, died, supposedly. But we had it so good back in the day. We had some characters that were leading Bitcoin. But man, McAfee, what an interesting individual, to say the least. Those were some classic times. Like we really didn't know how good we had it in 2017, even 2020 at this point. We thought the best times were coming. And actually, you guys know I love watching movies and TV shows. And I was telling Nico that, man, this really reminds me of The Sopranos in the beginning. He's like, it feels like I came in at the end of something. It feels good to build something. And I was telling Nico that, and it's like, man, is that where we are right now? Man, we're such boomers now. Like, we're just trading the S&P 500. It's over, guys. The Ponzi's over. We didn't realize how good we had it in the past, and now we're reaping what we sow. Anyway, enough of me lamenting here. I'm low-key trolling. I'm kind of making some jokes here, but let's move on to the news, because we got a new update coming out of Samourai wallet, and it's not good at all. So we'll be right back.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's bitkey.world with the code SIMPLY.
All right, guys. It is the holiday seasons. Make sure you secure your Bitcoin for your family by getting them some BitKeys. So go to bitkey.world, use a promo code SIMPLY, and you get 20% off. I need to order a whole bunch of these for my family. Anyways, I'm kind of trolling right now, but this isn't a towel, guys. So at Sat123, I took this from Nico this morning. It's like a EMF blocking blanket. And all morning I was just not feeling good, and I was like putting it on my head, I don't know if it's placebo effect, guys, but I was feeling better, and then Nico did it as well, and he's like, dude, I actually do feel a lot better. So get yourself an EMF blocking blanket for your head, because they are beaming messages into your brain, guys. Our brains are getting fried right now, and I actually now feel worse than I did 1 minute ago. Anyways, let's get into this story, guys. So very concerning news, to say the least. I know I've been on the show kind of speculating whether the Trump administration is really backing Bitcoin. Obviously, it's not a monolith, as anyone that has eyes and ears can see. There are parts of the current government that are essentially fighting each other. Now, we have seen the Trump administration doing their best to reel everyone in. Now, again, this is where it's unsure if the DOJ is following Trump's orders, or if, again, they're doing stuff to kind of undermine him. So I'm not really going to put blame here on who it is, but we just saw this, and it does seem like the attack or the privacy wars are in full force here against the Samourai wallet developers. So the Rage posted with the headline, U.S. government seeks maximum sentence for the Samourai wallet devs. You guys can see their name. I don't really want to repeat them. Anyways, the U.S. government is seeking the maximum sentence of 5 years for Samourai wallet developers who pleaded guilty to conspiracy to operate an unlicensed money transmitter earlier this year. According to the government, the Samourai wallet devs, quote, solicited criminals to launder money through Samourai wallet, not as a byproduct, but as a feature, claiming that the developers intended for the privacy service to be used to launder proceeds of crime from the outset. The defendants are asking the court to be sentenced to time served. And then, of course, 2 weeks ago, we saw Trump pardon CZ, which now everyone from the Trump administration is saying we don't even know who he is and we don't know why they did it. They're just like, yeah, it sounded like a good idea. People in crypto liked him. We also saw them pardon Arthur Hayes as well for essentially, at least from the charges that they were given, very similar things. Anyways, according to the prosecution sentencing memorandum, the developers laundered, quote, at least $237 million in proceeds from drug trafficking, darknet marketplaces, cyber intrusions, frauds, murder, I don't think I can say that, schemes, and I don't think I can say that one, using Samourai. Notably, the allegation that proceeds from some of these schemes had flowed through Samourai wallet had not previously been mentioned. Quote, the defendant's crimes are not predicted on a regulatory lapse, but on the defendant's unambiguous desire, intent, and actions taken to help criminals engage in money laundering and sanctions evasion through Samourai. The conspiracy to commit sanctions evasion charge, which too carries a maximum sentence of 20 years, was also dropped in exchange for the developer's guilty plea. The notion that designing Samourai wallet as a privacy wallet is some sort of endorsement of criminal activity is highlighted throughout the memorandum. As a prosecution writes, quote, Samourai's website bragged that it was virtually impossible to link inputs and outputs in even a single whirlpool transaction. And the privacy feature Ricochet was designed to create, quote, unnecessary intermediate transactions that served as a layering technique for Samourai users to make it even more difficult to determine that a particular batch of cryptocurrency had actually originated from criminal transactions. Again, the prosecution states that the Samourai website bragged about this feature, and it says further, describing the Ricochet feature as a premium tool that adds extra hops of history in your transaction and which would allow customers to stump the blacklist and help guard against unjust third-party account closures. Going further, though, the prosecution claims that blacklists are lists of cryptocurrencies. No, we don't need that one. Okay, so they dropping the charges, but the continuing prosecution. There is an interesting part about this later, which really kicked up the Twitter brigade here. So one, it does seem like the U.S. government, the DOJ, whoever you want to blame, they are attacking privacy. Maybe they're putting fault at the Samourai wallet devs for kind of marketing this for criminals, and that seems to be what they're doing. They're trying to make an example of them. So it doesn't look good. They're going to get a maximum 5 years. But what became kind of interesting out of this is where it's not so much coming from the U.S. government, But a lot of Bitcoiners now are putting a lot of fault on the Samurai wallet devs. And this is where it does get kind of interesting. So, practicing what you preach, the Samurai could demix transactions. The memorandum alleges that, quote, it appears that the Samurai wallet devs' animating concern was not fidelity to anonymity, but hostility to forensic companies like Chain Analysis, known to assist law enforcement. But the developers, quote, did not always practice what they preached. The prosecution states, according to the memorandum, quote, as confirmed by law enforcement seizures and analysis of Samurai servers, despite claiming that Samurai was a, quote, privacy service, the Samurai wallet devs retained sufficient information to trace or, quote, demix its mobile users' Whirlpool transactions. The prosecution herein refers to a main point of criticism of Samurai wallet's design by competitors and privacy advocates, in which users who did not run their own node provided their extended public key, their XPub, to Samurai wallet's coordinators, allowing the developers to cross-reference transactions. But the memorandum incorrectly assumes that there was, quote, no technical or operational necessity to do so, but the Samurai wallet devs cleared it up. Quote, the need to collect this XPub data was driven the functional necessity of calculating balances while operating a light wallet, highlighting that only around 20% of users were affected by this design decision. Now, if you aren't familiar with the Samurai wallet saga, it was very known that if you didn't run your own server, your own Samurai wallet instance, that you were doxing your holdings to the Samurai wallet guys in Whirlpool. That was one of the main contentions back in the day that really kind of stirred up the hornet's nest back then. But I think what might be different here, again, there has been some back and forth. Some people are saying the DOJ is lying. Maybe they don't know what's going on. But this is where, like, it started a whole new can of worms on Twitter. And for more of you privacy hardcore Bitcoiners, I'm sure you probably saw this on Twitter. So Nopara, which was creating a competing mixing service, Wasabi, they used to have beef. There was a lot of blood in the water. They were fighting each other viciously. Nopara tweeted this, and of course, it was kind of a gotcha. And he goes, Samurai Wallet was logging your XPubs on their servers. Source, the U.S. prosecutor that discovered them. Our doubt goes, it was always known that Samurai collected the XPubs of non-dojo users. The fact that they, quote, retained them, as far as I know, wasn't disclosed until now. There's a difference between we see your XPubs and, quote, we'll hang on to them indefinitely. So that's where everyone is freaking out now on Twitter, is like, okay, we knew that some users that didn't have their own servers, you're basically doxing your XPubs, but according to this memorandum, it sounds like they were keeping these XPubs, which is now a whole new, a whole new can of worms. And a lot of people are turning against the Samurai Wallet devs. I'm being completely transparent. But Lauren MIT, which I believe, I'm pretty sure he was working on Samurai. Maybe I'm mistaking this. But he goes, the thing is that the DOJ is lying here. No XPub was collected by the coordinator server, and Whirlpool units weren't required to share their XPubs. Our doubt goes, eek. This isn't the first time I've confused this. Whirlpool users are fine. It's users of the public dojo that shared XPub. Is that right? And he goes, that's right. Users who do run their own back-end dojo had the possibility to use Samurai Wallet's back-end to correct their mobile wallet. It's not a secret. It's always been publicly acknowledged. So this is where the new contention's going on. I've been seeing people say that they should be in jail for this fraud, this fraud claim. I'm not really, I'm not smart enough to really know what is going on the back end of the software. You know me, I'm a 42 IQ Bitcoiner here. I'm a moon boy at this point. I'm a self-admitted moon boy, but as you can see, the very big news, the very kind of concerning and sad news, is it looks like the DOJ is going to throw 5-year max to the Samurai Wallet devs. And then out of this memorandum, it's making everyone be very, very concerned of, like, okay, what were they actually doing here? Were they keeping XPubs indefinitely? Were they going to, maybe they got caught and they were going to erase them? Again, I'm not technical enough, and I'm not going to claim that I'm savvy enough to really break this down, but that is the new saga in the Samurai Wallet dev case. So, one, super unfortunate, and I'm sure we'll see some more collateral fallout from this. So that's what's going on with the Samurai wallet devs as of now. Not looking good to say the least. So Kent, I don't know if you've been following along on this. Did you catch this news? Do you have any thoughts on this?
Well, I did not catch the news, the latest, but I have been following along the Samurai dev case. And I mean, I think it's one thing that developers should be able to code. They have free speech as far as I'm concerned. And the folks that use that software ultimately are the ones, in my opinion, that should be held liable if they're doing anything illegal. So I don't like that the Samurai devs are facing the predicament that they're in. That said, I do think it's unwise to go poke the bear in the eye and then pretend like you just wrote code and you should be completely absconded for it. I just don't think it's wise, even if you are philosophically safe to go poking the bear. And so I think they sort of brought down the house on themselves to a degree here. And I think the XPug thing, I'd like to assume not a malfeasance here, but just, maybe they just weren't keeping their house clean, so to speak, and keeping things sorted out. So I don't really know about the whole XPub side of things. I won't speculate on it, but I don't like the precedent that this could potentially set in the US. That's the most worrisome thing to me, because I think that we absolutely must, as a community, protect the right for our developers to write code. And this infringes on that right. This memorandum does, unless some specific legislation gets written to counteract it. Otherwise, this precedent could lead to people leaving the U.S. to code, or I don't know what all the second order consequences are, but this is the first time that, it's a bit worrisome. And in some ways, I get it why they pled guilty, but I in some ways, I also wish they would have fought it just to avoid setting the precedent for the entire industry. But, it's not my choice. I can't imagine what it was like to be in their shoes, but I want devs to be able to develop and not self-censor.
Yeah, no, 100%. I think that's a fair case. So while you were talking, it did kind of remind me, and if you guys watch the show every single day, you guys know the last couple of weeks, I've been really, I don't know if inspired's the word, but I definitely had my eyes open from a lot of the conversations that Simon Dixon has been having lately. And it was kind of, I kind of connected these dots here where, look, on the one hand, we are seeing, and as you were saying, Ken, and this is why I'm saying it, there is a precedent being set right now, which has big implications for everything moving down the line. And my kind of thought frame here is something that I think we've said on the show before. Other Bitcoiners have said this before, but it does seem that, yes, Wall Street or the institutions and the nation states are embracing Bitcoin. But at the same time, they are fighting, the privacy, maybe more hardcore ethos of Bitcoin here. And it does make you think that there is seemingly a two-tiered Bitcoin kind of network that is, not that there's a split yet, but it does seem like there is, on the one hand, like captured Bitcoin, and on the other hand, there's like more hardcore self-custody Bitcoiners. And there is this kind of war playing out right now. Well, yes, the institutions are here. Yes, they want Bitcoin, but they want nothing to do with the more radical elements of Bitcoin. And I think this is something we're all going to be kind of living through for the next 3 or 4 years, 5 years, 10 years of, can Bitcoin maintain its kind of, for lack of better terms, more radical birth and ideologies as Wall Street comes in, because we all know they will not and won't touch, Bitcoin that has been coin joined. They're obviously trying to incentivize you to sell your self-custody coin so that they can custody in their ETFs and, their collateral products. And so I think this does go into what I've been saying for the last couple of weeks, is like, the most important thing to be doing right now, since there is so much uncertainty in the markets and what's going on, is making sure that your Bitcoin is in self-custody, secured, because that, to me, is the safest place to be, considering no one has any clue what's going on. We don't know what the any administration's kind of incentive is or what they're going to do in the future, the only way we know how to protect ourselves is just making sure your Bitcoin is backed up very securely, because things are getting very crazy. Yes, the price is fluctuating. I think I see everyone in the chat saying it's testing 100K here. But as we see, there is this kind of continuation of this privacy war playing out. And it does look like, you can say it's nefarious, you can say it's with good intentions, but it does look like Wall Street is doing their best in cohesion with, the governments here, the public and private sector, kind of eliminating a lot of the more radical privacy-centric views of Bitcoiners. And so that is totally concerning. As I've been saying, Bitcoin can either be, on the one hand, freedom money, or the other side of the coin, us building our gilded cage here, our golden cage here, where everything is tracked and bagged and part of the social credit system. Like, that is something we definitely need to be vigilant on and stay awake and aware of what's going on. So that'll be my takeaway. But I do want to move on because I want to chat with Kent. He's been doing some cool stuff. And actually, we're going to, I think, unpack some of what Kent, you and I were saying before the show. So I think there's a lot of wisdom in what you were saying. So last commercial break, and we will be right back in about 60 seconds.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
All righty, Kent, we are back, man. Last time you were on, you were talking about the, your new Ethiopia project. You just launched, super hyped on that. We are gonna, change the direction a little bit here, because you said something, and I rehashed it earlier, but you said essentially the price of Bitcoin has changed, but the value proposition of mining hasn't. Can you unpack that for the audience?
Yeah. So I think it's it almost sounds so simple, it sounds stupid, but Bitcoin mining is the only way to generate Bitcoin, right? So you put dollars into buying a piece of hardware, you purchase electricity to run that hardware and maintain that hardware, and it generates you Bitcoin. There's nothing else on the planet that will generate Bitcoin. So as a result, what you're doing is you're saying, cool, I'm going to go buy a piece of hardware and have this fixed cost of energy, and I get a certain amount of Bitcoin out. So if you look at it, like Bitcoin's price volatility is completely on the side from the Bitcoin mining value proposition, because the price of the hardware, it hasn't changed since Bitcoin changed from 125K to today. Price of the hardware is the same. Price of the electricity hasn't changed. And the amount of Bitcoin that you're generating, it really hasn't changed much either. You know, every 2 weeks there's a difficulty adjustment, and maybe it changes a couple percentage points on the margin there. I actually believe that we will actually see it coming down here as, you know, some of the publicly traded mining companies pivot away towards AI. I expect, you know, some hash rate comes offline as that gets substituted for high power computation. But all in all, what's actually changed since we were at 125K? What's changed is the market's mentality about Bitcoin, right? Everybody's freaking out. We're going to 35K, I think I've seen in the chat. And maybe 16K is a low water mark. You know, we're all going to die, right? Like, this is happening. So let's back up the truck and plug in some hardware, because that hardware value proposition hasn't changed. And if more miners decide to unplug, well, great. Now you get more Bitcoin. The point being that mining is the best way to acquire Bitcoin, full stop, because all these shenanigans about price just go away. You're just plugging in a piece of hardware. You're doing a cypherpunk approach to acquisition, because it's from the protocol. It's outside the banking network. And you are able to put those directly into cold storage in your wallet, and you don't have to think about it. You just pay your electric bill. You know, I don't understand why we decided that going to exchanges was a better experience, but it is easier, right? And that's one of the things that SAS Mining is tackling, right? Is the ability to acquire Bitcoin through mining in a software as a service approach that we're so used to online, like really the first company to approach it from that angle. And, you know, to kind of back this up, we're seeing a massive influx in our customer base right now as a result, because people, I think when you first learn about Bitcoin, there's a knee-jerk reaction that you want to mine to get your Bitcoin, because there's something really rewarding about generating it yourself. And I don't think to date that anybody has really cracked that nut on how to do it in an easy way, and we're attempting to, and I think we're getting close. So anyway, I know I sound like I'm shilling, but I'm really proud of what we're building here, and I just think it's better Bitcoin because it's outside the banking system. You know, your energy cost averaging at a lower price. You don't have to worry about the price fluctuations of Bitcoin, and you don't ever have to feel stupid that, you know, you threw in a whole bunch of money and the Bitcoin went down 10, 15, 20%, and you feel like you need to sell it. Like, that just doesn't happen.
Yeah, no, it does make a lot of sense what you're saying. And I was actually thinking about this last night, and I think we've talked about this a few times. You know, the hash rate in Bitcoin is what now over a zeta hash. It's you know, securely gone over what a zeta hash is, 1,000 exahash. It's just like it's skyrocketed. You know, Kaiser keeps saying that the price follows hash. The hash is just going crazy, and the price hasn't been doing anything. And it's not about talking about the price, but last night I was thinking, just in the context of mining, for people out there, and I know you did just kind of make the case for it, but it does seem like like the competition has gone so high now with all the big public companies, and it does seem like the little guy. I know we've seen a couple of solo miners with their what are the bit axes or the nerd miners or whatever get some blocks recently, but it does seem like the barrier to entry for new people that, because I remember when I got into Bitcoin, I've told this story before to you where I got caught up in the cloud mining, and I think I only put like $100 into it, but never got that money back, obviously. And so anyways, my question is, like, it does seem like the barrier to entry and the competition is so high right now in Bitcoin mining because of the public minings and the huge infrastructure and the fact that it's going like globally, you know, huge nation state backed mining operations. So anyways, it's like, is there still an opportunity for the little guy out there to compete, or is like kind of the business model that you're creating, in your eyes, of course you have your bias, but it seems like that might be the only way for the small guy to compete now? It's no longer you just plug in some S9s in you know, in your house and your wife yells at you. Like, those days seem to be completely gone. And so it does seem like you need to kind of update your thinking on how to successfully get into Bitcoin mining if that's a choice you want to do.
Yeah, I think, you know, there's a couple different segments of the market that we see, right? I think the BitX movement has been incredible, right? Because it's helped to educate people on mining because they can, there's an affordable price point, you know, $100 to $200 for one of these little devices. You can see how mining is, you can touch it, you can feel it. Great education, you know, lottery ticket. Odds are not much better than a lottery ticket. And thankfully, a couple people have hit blocks along the way with those. And then there's another segment of the community, though, that wants to plug in mining hardware in their garage, the noise, the electrification of your mining rig, doing that all safely so there's not fires, you know, the marital disputes that happen. Most of us don't want that. But the bigger problem with trying to mine in your home is you just don't have low cost power. The average cost of power in the US is like 19 cents and going up thanks to, you know, data center pressure, which is why Bitcoin mining publicos are pivoting towards that. So it's just not cost effective, which is why we've scoured the planet and we operate in Paraguay, the Arctic Circle in Norway, and now in Ethiopia, because we want low cost power to offer to our clients so that it's actually a valuable proposition for acquiring your Bitcoin. So yeah, it's not, I don't see Bitcoin mining is largely available unless you're going to work at the margins or the edges and tinker around with it. You know, heat reuse is a great application. I mean, as long as you're going to heat your home with electricity anyway, or heat your water, why shouldn't you earn a few sats doing it? Love that application. But if you actually want to acquire Bitcoin in any sort of volume, then really kind of a software as a service approach like we're taking, I think, is your best bet.
Got it. Okay. So pivoting a little bit, you did say something else interesting before we started the show, and I haven't teased it yet, but you said you just got back from TabConf, and you were thinking very deeply about this idea of Bitcoin ossifying. Can you explain this to people?
Oh yeah, this is a spicy one, and I don't know that everybody's going to love this take. But it's a pragmatic take.
Get spicy, Kent. Get this. What the people want.
Yeah, so I'm going to be spicy. I'm going to piss off some folks. But
wait. Not too spicy. Remember, you're on YouTube.
Oh yeah. No. I won't get as spicy as I did last time. You guys don't know this, but I almost got them a strike by
he did. So I got to reel him in a little bit
of the node wars of 2025. But no, I think my spicy take is I went to TabConf, which is a developer only conference, wonderful conference. So this has literally nothing to do with the conference. And I was looking around, you know, there's a lot of core devs there. There's a lot of other devs working on other areas of the Bitcoin protocol, Lightning, all this stuff. And what I noticed was what was missing in that. And I was reflecting, you know, I gave a talk at the Baltic Honey Badger. Last time I gave it about how Bitcoiners must mine, and one of the topics in there is how I see Bitcoin as, you know, 1,000-year project. I genuinely do, and if you look at anything that has survived that humanity has worked on continuously for 1,000 years, what are the attributes that we actually had as a community to cause a multi-generational project to survive? And when I look, you know, like what survived 1,000 years, it took us 900 years, 860 years, I believe, to build the Milan Cathedral. There's a couple other like Catholic cathedrals that took a similar amount of time to build in Europe. But if you look at like what institutions have survived for like 1,000+ years, and I was there at TabConf and I was like, man, I don't think we're going to make it because we don't have any of these characteristics. Like we're confined, like the caretakers of the Bitcoin software are computer scientists, you know, cryptographers, maybe a few computer engineers from the mining side. You know, I just don't think that we actually have a holistic picture or the worldview necessary as a community. You know, where's the historians that are studying what this takes? Where are the biologists that are studying how Bitcoin's a digital organism? I just don't think that we have what it takes to build a 1,000-year project that's going to continue to evolve and change. I don't, unless our community fundamentally changes and we go look at what it takes to build a 1,000-year institution. And I don't think we have it in us. So what I actually think pragmatically is going to happen is we break down into warring divisions and tribes, and we basically ossify where we are right now. And I don't know that that's a horrible thing either, right? So this is not me painting it this good, that bad situation. This is just me pragmatically looking at what I think the most likely outcome is here. And I think the most likely outcome is, unless it's an existential threat to Bitcoin itself, like quantum, I do think is an existential threat. Unless it's something of that nature, I think that the most likely outcome for Bitcoin's development is stasis and more towards ossification. So anyway, that's my spicy take.
It is spicy. It does make you think of what you're saying and where we are. And honestly, like you said at the end, it's hard to say whether this is a good or a bad thing, but while you were going, it maybe this was just, the eternal optimist in me. It really just sounded like to me a call for every single one of us to get better and try to rise above who we are at the moment and try to become, the Renaissance man that Bitcoiners have been talking about for a long time. Like I joke with you guys all the time that I'm a 42 IQ Bitcoiner here, but a lot of my interests are definitely multidisciplinary. Like I'm not an expert on anything per se, but I have dabbled in a lot of things before I got into Bitcoin, which I think helped me understand what Bitcoin is and the impact it's going to have and, where it's going to go. And only when you get in Bitcoin do you realize, like, oh, every little rabbit hole that I took to get to here was needed for me to understand this. And I think that same kind of mentality should continue, even though you are a Bitcoiner, and we should kind of go down into different rabbit holes and always, like I do it all the time. Whenever I'm watching anything that's not even Bitcoin related, like any movie or TV show or read something or conversations, it always does come back to this project that we're a part of. And of course, for us on YouTube, like the work that we're doing is like, okay, how can I add this to my mental framework so that I can be a better person and I can help usher this in for the long term and it become what I think it is. So I thought that was the deep perspective, and I'm definitely going to reflect on that one, Kent. So love to hear. Anyways, before we go on and wrap up the show, Kent, we got to do a SAS mining plug. So for the people that aren't familiar with SAS mining, I'm gonna pull up the website, do a elevator pitch for people, and then we'll wrap up today's show.
Yeah, man. So SAS mining is your software as a service provider. We call it mining as a service. So you go on our website, go to the shop rigs, or you can go check out our calculator. Actually, check out the calculator real quick, because I'm proud of this. I didn't get you to. So we've got what I think is the easiest way to look at the value proposition of Bitcoin out there. So you can actually scroll over that exchange price and see what the value proposition does as you go up or down on that. So as you go up, you see that
here, let's go 91K because it's going to drop on us.
Yeah. You're stacking at. What you notice is your stacking price is still 50K, right?
Yeah, that's crazy.
How much do you generate for what you're paying? So we just try to come up with a way to get this across in a very, very simple way, because what I've found being in Bitcoin mining is that people have been very confused by it. And I think that people don't think about it the right way. And that's because our industry hasn't done a good job thinking about it from a Bitcoin perspective. And it's because most of the hash rate, and literally guys, I just had a conversation today. I have to keep it confidential who I was speaking to, but I had a conversation today, somebody deep that's in the pubcos who absolutely confirmed to me that they are using Bitcoin as a stepping stone to get fiat dollars and to do other things. They're playing fiat games. Most of the hash rate on the network is not there to acquire Bitcoin. And guess what? This is the only way on the planet to generate Bitcoin. So if we want to actually have a healthy network, we actually need to be acquiring our Bitcoin by stacking sats through mining. The downstream centralization issues that at least myself and others are worried about just naturally go away as we mine, because we won't allow it to happen. We'll protect the network as a social layer. So yeah, you go onto our website, purchase a mining rig. We get it plugged in for you, 24 hours in Paraguay, up to 7 days. Usually it's 3 to 4 days in Ethiopia. You pay the electricity, you keep the sats. When they're paid out from the mining pool, we keep just 15%. pretty proud of the fact since we last spoke, I believe we found not one, but 2 blocks with Ocean. So you go type SAS mining, you'll go see our name imprinted on the blockchain. We know the exact customers and gave them shout outs for producing the blocks from their hash rate. But yeah, purchase a mining rig, we get it plugged in. We don't make money selling you hardware. We don't make money selling you electricity. Maintenance is included though in the price of electricity. What we do is if we don't make you Bitcoin, we're not getting paid ourselves. So we tied our fate to our performance. So we are good Bitcoiners and aligning incentives. And what you see is you jack up that price and mining starts to look pretty sexy, huh?
Yeah, someone said go to 1 million off these. So I'm
oh gosh. Yeah. I don't know what's gonna happen. I don't know if you have been tested.
Let's see. Whatever.
Yeah,
1,000,003. 1 million. Oh wait, sorry. Whatever. 1,000,003. Yeah, that's some good savings there.
Yeah, you're definitely saving a lot for buying it, eh? Yeah, so you could either generate it off the network at cost, or you can go buy it on the secondary market. I always like the primary though, so that's our approach. Just trying to bring Bitcoiners back to the fold. Get your sats the way Satoshi got his, and intended all of us to.
Yeah, man, that's awesome, and also kudos to the Ethiopia site because there is a good arbitrage between the Ethiopia site and the Paraguay site. So, you know, the new people that can get contracts with you in Ethiopia, they're going to be very happy, I think. They're going to be very happy. Anyways, Kent, thank you so much for coming on today. It's always a pleasure to have you on, man. So we'll see where we are in about, a month or so when you'll probably come back on with some new news, and we'll see if it was over, if we were right or we were wrong. You guys know I'll tell you when I'm wrong up front all the time. So thank you so much, Kent. Let me pull you behind the scenes real quick as I wrap up today's show, but really appreciate you being on today.
Yeah, thanks, Nico.
All right, guys, you made it through another show. We appreciate you. We love you. I think it's days like today. There's 2 things you got to do. 1, don't obsess over the chart unless you're a masochist like me and you look at the 1-minute chart just for the giggles. And 2, looks like ramen's on the menu for tonight, boys. So Marusian for dinner and step outside, touch some grass, call your loved ones, all that good stuff. We'll be back tomorrow. We love you guys. We appreciate you. This has been Simply Bitcoin Live. We'll see you tomorrow, 12:30-ish, something like that. All right, peace, guys.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.